In today's video, I'm going to share with you 5 reasons why dividend cuts don't matter with Yieldmax, Cornerstone, or Defiance funds. Yieldmax, Cornerstone, and Defiance help us earn over $300,000 per year in dividends, as you can see below, and our performance value shows that we're beating all the indexes with this approach. We're up 21% for the year, the S&P is up 12, and the Nasdaq's up 14. So again, we're beating all the indexes with Cornerstone, Yieldmax, and Defiance, and some margin usage, which all help us live the FIRE lifestyle. FIRE stands for Financially Independent, Retire Early. If you need help living free from a 9 to 5, email me for my e-guides at akintodd48@gmail.com. For every $1 you put in your account, you get $4 of purchasing power. I'm just using a fraction of this purchasing power to get ahead. Now my margin debt is down to $175,000, and my income of over $300,000 will pay this back in less than 1 year. Then I'll be left with all these dividend paying assets to myself, paying monthly cash flow for life, which act as qualifying income to banks for loans. That's how we really level up our account. You can't beat the market with trading gains because 90% of traders lose. So I go with dividends and the indexes because the indexes always win over time. And then dividends help you qualify to banks for more loans to truly live the FIRE lifestyle. Banks cannot rely on trading gains to verify your income history. They can only rely on your pay stub or dividends. So I choose to go with dividends because they're much more reliable and stable than a job. Plus, I'm living free from 9 to 5. So why wouldn't I want to pursue this dividend strategy? So the first reason why I'm not worried about dividend cuts with Yieldmax, Cornerstone, and Defiance is because dividends are based on volatility, not fundamentals for Yieldmax and Defiance. Yieldmax sells call options, Defiance sells put options, and I haven't been able to get very good premiums for my put options either. I need a down market to increase my premiums for my put options. So with Defiance, I'm not worried about the dividend cuts because the market keeps going higher. So all of my options that I sell puts on as well have lower premiums, just like Defiance. If and when the market falls, I'll be selling more puts to get higher premiums, and I'll be buying more Defiance to get the higher premiums. If you need help understanding how I do these put options, that's in my Volume 6 e-guide. We make about $30,000 to $50,000 per year from these sold options, in addition to my income of around $300,000. I love selling options because they give me extra income once again, and they lower my risk. Because when you buy options, they're risky. 90% of traders lose trying to time the market. But when you sell options, you lower your cost basis through the premiums, and you just sell time and let time go by. And if you do end up getting assigned, well, you buy the stock at a lower price than everyone else is controlling it at, and you get to go long on the long side after assignment. So you welcome assignment when you sell options, and most of the time I don't even get assigned because these options are so far out. So I won't get assigned, but if I did, that's a blessing because we get to make a lot more money on the long side, which then helps offset the decay from Yieldmax and Defiance. We need these long side capital gains to, again, offset the erosion that you see from Yieldmax and Defiance. I also buy Cornerstone, which, as you can see on Morningstar, is a 4-star fund, and it goes upward left to right on its chart. See, upward left to right here, but if you go to E-Trade, you see it goes sideways to down here. This is because you have to time Cornerstone between its rights offerings, and that's in my Volume 4 e-guide if you need more help playing Cornerstone. Cornerstone, you time it between the rights offerings. It has a 20% dividend, and it drips that dividend. If you're owning it up here at 14, it drips that dividend down here at 8 for free money every month. There's no other index fund that I know of that pays this high of a dividend that actually grows between its rights offerings, and then it drips that dividend down at the bottom for free money every month. And when you buy my e-guides, you get free access to the Discord chat for life, where we alert you of the Cornerstone rights offering announcements. So we have many channels here for your leisure. Okay, we have Yieldmax, Cornerstone, Defiance, taxes, you name it. And we also have the Cornerstone rights offering announcement channel, which can be found right here. Okay, we have over 1,000 members here in the Discord chat room pursuing the FIRE lifestyle, who are all on top of this rights offering announcement for Cornerstone, because again, it's how we get our growth. Cornerstone is how we get our growth and our low maintenance. Okay, QQQY, as you can see here, it's 30% maintenance, so that's why we have so much in QQQY. But Yieldmax is 50% maintenance, so I can't put too much of my money in Yieldmax, again, because it sucks up half of my equity. So I put most of my money in QQQY and Cornerstone because it's 30% maintenance. If you need help understanding maintenance, that's in my Volume 3 e-guide. So we need to have low maintenance here to live the FIRE lifestyle, because that's how we get high available withdrawal. We need to be able to withstand over 30% corrections in the market at any given time. Plus, we have to still be able to withdraw freely out of our account to pay our bills. All of my bills are automated out of my E-Trade account, and I can also swipe my E-Trade checking card and go wherever I want in this world. I can buy cars, clothes, shoes, whatever I want. My E-Trade checking card acts as a debit card, and I can swipe it again whenever I want, wherever I want, to buy more things, even though I'm in margin debt. I just add to my margin debt, and then my dividends pay back my debt at the end of the month. So this is a never-ending stream of income that we get to spend from, and as long as I spend out of my dividends, then I can do whatever I want. I can keep swiping my E-Trade card again and do whatever I want because of this high available withdrawal, which again is due to our lower maintenance funds like Cornerstone. Again, if you need help understanding maintenance, that's in my Volume 3 e-guide. So Cornerstone is low maintenance, Defiance is low maintenance, Yieldmax is higher maintenance, and so we have Yieldmax for their unique income opportunity, and we have Defiance for their income opportunities, but we have Cornerstone for the growth. Yieldmax and Defiance go sideways to down over time and decay very badly on their charts. Cornerstone looks like it goes sideways to down on its chart, but again, you have to factor back in dividends, drips, and rights offerings, and as you can see here, it moves upward left to right. It even outperforms the S&P if you go check out my past videos. So I'm not worried about the dividend cuts from Yieldmax because they're all based on volatility, not fundamentals. Whenever the volatility falls, I just buy more because you know that the index funds are going to go higher over time. So whenever dividends fall because the volatility falls and Yieldmax, well, then I just buy more on the dips. And with Defiance, I expect dividend cuts at the highs of the market because, again, when I sell options, I need higher premiums to get more money from selling my options. But when you sell options, you want to wait for a down market, not an up market. So that could explain why Defiance had their dividend cut. And then I just bought more, okay? That leads me to my second point. The dividend cuts in Defiance just emboldened me to buy more, especially on the dip on Friday because the Russell had a dip on Friday. So I sold my JEPY because JEPY was 50% maintenance. And then I bought more IWMY and QQY because IWMY is cheaper and has a huge dividend. There's JEPY's maintenance, it's 50%. QQY has 30% maintenance, QQQY, 30% maintenance. So I bought more QQY and then I bought more IWMY because yes, it has higher maintenance, but it fell on Friday and you have to buy these Defiance funds on their dips. And 50% maintenance, that's not good for IWMY. However, it has a 96% dividend yield. So if we hold this fund for about a year, then we'll cash flow anyway. It doesn't matter what kind of erosion we're seeing, what kind of losses we're seeing. We're going to be paid back in full. And after that, it'll just be free house money going forward. But we still need our growth, and that's why I have so much in Cornerstone. I have 400,000 in Cornerstone, and I have around 200,000 in Defiance. So we get Cornerstone for the growth, Defiance for the excessive dividend yields, and Yieldmax for the dividends and some growth, but you have to trade around Yieldmax's highs and lows to offset their erosion. And by swapping out of JEPY to go to QQQY and IWMY, I lowered my margin significantly because the yields in IWMY and QQQY are much higher than JEPY. So I didn't have to buy as much of them to keep my income over 300,000 per year in dividends, and then my margin also fell by about 20,000. So I'm waiting for any market dip to add to our margin debt. Yes, my 300,000 in dividends will pay back my margin debt in less than 1 year, but I always raise my margin debt back up because if you're not growing, you're dying, and my interest on this margin debt is so small, it doesn't matter to me if I hold it. My interest is around 6% because I've negotiated down twice. Many of my clients who bought my e-guides did the same thing. When you buy my e-guides, you get free access to the Discord chat room for life and my phone number. So just keep this in mind. So yes, I've been waiting to add to IWMY. I just needed a dip in the Russell to do it. I've been waiting to sell JEPY because it's high maintenance and doesn't have that high of a dividend. And I've been wanting to take the proceeds from JEPY and put them into QQY for the higher dividend and lower maintenance, and then put the rest into IWMY for the higher dividend and cheaper share price. Because the Russell 2000 is still the only index that's off of its all-time highs. So I don't mind buying more IWMY on the dip because of the dividend and because it's still cheap relative to the other indexes out there. The third reason why I don't mind these cuts is because even with the cuts, these yields are still higher than anything else out there, and they'll still cash flow you quicker than real estate. Yieldmax and Defiance will cash flow you in around 1 to 2 years because they're 70% to 100% dividends. Cornerstone will cash flow you in 5 years because a 20% dividend times 5 years is 100% payback. That's all that matters here at this channel, okay? It doesn't matter if you make money today or lose money today. You just want your dividends to cash flow you over time. As long as your available withdrawal is high, you don't mind losses in the market. Yes, we were down 3,700 on Friday, which is 0.39%. It's still relatively in line with the indexes. You can see the Dow Jones was down 0.22, the NASDAQ was down 0.23. We underperformed on Friday because we have Bitcoin, so be careful. Bitcoin is not in the indexes. You're supposed to keep only 3 to 5% of your portfolio in Bitcoin. That's why we had weakness on Friday. We had Bitcoin weakness and small cap weakness, which they're both kind of tied together, Bitcoin and small caps, they're both risk on. And when you have a positive jobs number, that leads to more fears of inflation, which means more fears of rate raises, which then hurts anything that's growth related. But again, I'm not worried about losses in the market because our dividends cash flows over time. As long as we have enough available withdrawal to withstand 20 to 30% corrections in the market, and we could still withdraw freely out of our account to pay our bills, then days gains or losses don't even matter. Days gains are just icing on the cake. The fourth reason why I'm not worried about dividend cuts is these dividends will rise again as premiums rise, okay? If volatility rises for Yieldmax, then you're going to see higher premiums and higher dividends. If the market falls and premiums increase for the put side and Defiance, you're going to see their dividends rise in theory, because I saw on the last market dip, we saw Defiance raise their dividends, and I'm guessing that's because, again, the market fell and their premiums increased. So whenever the dividends fall, they'll rise again someday. So I always buy the dips, assuming that they'll rise again because the indexes always come back. And so this is just a return to the norm for volatility with Defiance and Yieldmax, and I always buy these dips as a result. I'm also not worried about dividend cuts because we get our growth from Cornerstone and UPRO. When I sold JEPY, I used some of the proceeds to buy UPRO. For every 3,000 that I have in JEPY, I just buy 1,000 of UPRO because UPRO is the triple. UPRO is 75% maintenance, so be aware of this, and triple leveraged ETFs decay, so you want to buy them on dips. But when I lost JEPY, I had to get back my index exposure somehow and our growth, so I bought some UPRO to replace the lost JEPY or S&P 500 exposure. Now with UPRO and Cornerstone, we get our days gains ability, and then with our dividends, we get our growth that way. So we get best of both worlds, days gains ability through Cornerstone and triple leverage ETFs. And then we get our dividends from Cornerstone, Yieldmax, and Defiance for extra growth, especially when you're using margin. And again, we use small amounts of margin, only the amounts that our dividends can pay back within a year. And then if the market ever dips, I just use that opportunity to add to my margin debt because it increases our income further, which then helps us pay back our debt quicker. Each time that we take out more debt and raise it again, we pay back our debt quicker each time. And this becomes a snowballing effect with our income, and we grow our income significantly while lowering our risk as a result, because we keep growing our equity every time our dividends come in, placing us further and further away from a margin call. I also always keep on options in the event of a crash in the market. People always ask, well, can you withstand over 30% correction in the market? What about a crash? Well, I always keep put options on, and if you need help understanding how I insure my portfolio with put options, that's in my Volume 5 e-guide. So if you need more help doing what I'm doing, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, you get free access to the Discord chat room for life and my phone number, so just keep this in mind. Also, if you like my video, click like or subscribe, and I'll talk to you soon. Thanks.